Hello and welcome to the RANsquawk Weekly Wrap-Up video. It's good to take a moment to answer a couple of questions you've sent into the desk this week. Firstly, we're going to discuss today's non-farm payroll figures. So in terms of the consensus, it was for 145,000, that headline coming out at 243,000, strongly beating the consensus estimates there. In terms of other figures, it was noted that there was an increase in employment across the broader markets, with increases in manufacturing, services, private payroll jobs, and also in construction jobs as well. So this did add to the feel-good factor regarding these non-farm payroll figures. It's also worth looking at the unemployment rate. This did fall to 8.3%, so that's its lowest level since February 2009. So just taking a moment to dissect some of the non-farm payroll figures, we did see the birth-death adjustment come in. This did show quite a strong drop of in excess of 300. So, however, bearing in mind the birth-death adjustment is based on some older data with the 2010 consensus as the benchmark, so some notable analysts don't give a great deal of credence to the birth-death adjustment, despite the fact that it has picked up in terms of those people looking at this data in recent months. So in terms of the market reaction, we have seen strong move to the upside in US stock futures. So this has seen a move in E-mini S&P to around the 1340 level, and equities haven't really sold off a great deal, particularly throughout the day, and have been moving gradually higher throughout the session. So this does point to the fact that investors are generally receiving this data pretty warmly. We also saw quite a strong sell-off in T-notes as well, and we also saw some dollar strength in the markets. So taking a look at some of next week's key highlight events, one of the most important things that we'll be looking forward to next week is the ECB's rate decision and the Draghi conference that will follow. In terms of analyst expectations, almost all analysts are expecting the ECB to keep rates on hold at 1%, as was the case last month. In terms of some of the expectations out of the conference, we're not expecting a huge amount out of ECB's Draghi. He is likely to point out that most of the economic data coming out of the Eurozone recently has been relatively positive, and it does appear that the Eurozone has stabilised in terms of the economic growth and no longer looks like it's sliding into a recession. Draghi is also likely to point out that the demand for the LTRO operation at the end of the month is likely to be pretty strong. We have seen some analysts tout a figure of close to €1 trillion this week. However, much of the commentary regarding the LTRO will pick up as the month goes on. In terms of other things Draghi is likely to highlight, he's likely to say that all options remain on the table for the ECB. However, he is unlikely to be committing to any particular methods that the ECB will likely enact. We're also likely to look out for any comments potentially on the ECB in the Greece PSI talks, so that may well come out, particularly in the Q&A session. In terms of the BOE, they have their rate decision. Almost all analysts are expecting it to be kept on hold at 0.5%. In terms of the Bank of England's asset purchase programme, we are expecting another round of QE to be announced. In terms of the forecasts, most banks are speculating between 50 and 75 billion sterling. However, we have seen a couple of notable US banks cut their forecasts this week for the BOE's QE programme, so that'll be closely followed as well. So that's it from us for the week. We hope you've had a great week, and we hope you have a great weekend, and we'll see you again next week.